This is your 2023 July market update for the GTA. I'm going to talk to you about three things. What has happened in July of this year, what has led up to that, and what we can expect for the fall coming up. I'm going to keep this quick because it is summer. My name is Marcy Verburg. I'm a realtor here in Toronto. All right, so July of 2023, what has happened? We know that the volume is up significantly. That's plus 7.8% versus July of last year. That means there's more homes being sold versus last year. The prices are up 4.2%. The new listings are up 11.5%. And it's taking less time for a home to sell. Now, the Toronto Real Estate Board is saying that the market is becoming more balanced. They're saying people are adapting to the higher interest rates. So is that the case? We're going to talk about that a little. I wanted to mention that some of the media is talking about being down 8% in volume, saying, oh my goodness, the market's down. Let me just clarify where that's coming from. The market is down July versus June in terms of volume. It's down a teeny tiny bit, 0.7% in terms of price versus June. We like to use June, or I like to use June. I was actually looking at some data. June is actually a very stable month. June is the one month that doesn't change. July, however, people go on vacation, they go away, they're not here. If you look around the GTA, everybody's gone. So it is natural for prices and things to go down a little bit in July and for the volume to go down. We also see people taking their homes off the market and not selling in August just because nobody's here. So why put it on the market, right? I did want to mention, we're talking about July, we have to be a little careful because we're comparing to last year, 2022, when July was literally one of the worst months in real estate history in Canada. The market had shot way up. And then in July last year, we saw a 1% increase in the interest rates and everything just kind of came to a grinding halt. So be a little careful when we're comparing to July. So what else do you need to know? What has kind of led up to this? Well, we know that we had a crazy couple of years. And then we know that the Bank of Canada did 10 interest rate hikes within the last year. Unbelievable. So we know a lot of people have been sitting on the sidelines, and I have talked to you a little bit about that. What's new? So there was a recent survey done by the Bank of Canada, a very large survey, and they found a couple of things that are important for us to know. One of those is that consumers are becoming way more confident in the market, believe it or not. They feel like things are becoming less volatile and more stable. They also feel that they don't have a risk of losing their jobs. They're pretty confident in being able to keep their jobs. However, as you know, people are very concerned about the cost of living in Canada. They're also concerned about their cost of their mortgage, and they're concerned about prices. They're saying that they're going to be spending less money. Now, what are they spending less money on? Well, it's more consumables. And they are actually planning on spending more times paying down their mortgages. Now, here's something that's very interesting. More people than historical averages are planning to move, buy, or sell a home this year. I'm going to throw this chart up here just so that you can see it, because that's kind of really interesting. We keep hearing from the media that people aren't planning on doing that. Yet this big survey showed that people do have intent to move. So we may start to see more movement. Now, of course, you've also got a number of immigrants coming into the market. Research shows that the number one goal of an immigrant coming into Canada is to buy a home. When they get here at first, they rent from about 1 year at least, maybe up to 5 years. But their goal is to buy a home as soon as they possibly can. And as you know, we're having about 500,000 people coming into our country per year. You've also got all the millennials and younger people who are having families and they want a home to live in. So you've got the natural demand, you've got demand from immigration, and you've got people wanting to move. They're kind of settling and adjusting to the interest rates. Now, are they really happy about them? Obviously, we're all not happy about the current interest rate situation. Are they going to deal with them? Yes. So you might actually see you've got forces pushing the market pressure up in prices. You've also got some forces pulling it back down. What Bank of Canada does, well, that's anyone's guess. Right now, they've kind of forced the market down a little bit, in my mind, in August. Although if you look around, you're starting to see more houses coming up for sale. So on the other hand, unfortunately, I think what you're going to see is some people saying, meh, we don't really want to pay this much in mortgage anymore. we're going to downsize, we're going to get out of this market. So that actually might give us a little bit of movement. Okay, I am just going to finish off by giving you the prices like I always do in Toronto. Now, this is for GTA in general. I can get you the other more specific ones for your neighborhood if you'd like. Just let me know. Okay, so your average detached house in this area is 1.427 million. That is an increase of 4.8%. Your semi is 1.1 million, which is an increase of 2.8%. Townhouses, 956,000, which is an increase of 5.8%. Condos, 735, which is an increase of 2.1%. And the rental price is now an average of $2,532 for a one-bedroom apartment, and that's up 11.6% versus last year. I know that's crazy. It's a really big increase, and I know people need help with that. I just wanted to let you know what it is. Okay, so again, my name is Marcy Verburg. My information is below. If you have any questions, I would love you to send them to me and I can help you out. And if you can always do a little like or subscribe, that would be awesome. Thanks so much, guys.